Please go ahead.
Okay. Dear esteemed colleagues and distinguished students, welcome everyone. It's a great pleasure to be here today with our valuable guests from India. We extend our warmest greetings to all our guests. We have gathered for the panel discussion titled The Economics of Financial Inclusion, organized by the Business and Economics Society. I am Associate Professor Işıl Demirtaş, the moderator of this panel. I also serve as the academic advisor of our society formed by Giresun Üniversitesi students. In this panel, we will discuss an important book in the field of financial inclusion, The Economics of Financial Inclusion, edited by Dr.Firdous, Ahmad, Malik, and Professor Tarika, Singh, Sikarwar. This comprehensive and valuable book explores the multidimensional impact of financial inclusion on economies. In addition to our esteemed editors, we will also like to extend our appreciation to the contributing authors whose efforts and research have made this publication possible. We extend also our sincere gratitude to Dr. Malik and Professor Sikarwar for being here to share their insights with us. First of all, I would like to introduce our guest panelists, who are also the editors of the book. Dr. Firdous Ahmad Malik is known for his significant work in the fields of financial inclusion and development economics. He serves as an assistant professor of economics at the University of the People. He is also the president of the Jammu and Kashmir Economic Association. We thank him for his valuable contributions to our panel. Now I would like to introduce Professor Tarika Singh Sikarwar, who has extensive experience in finance and management. Dr. Sikarwar is a professor and associate director at Prestige Institute of Management and Research in Gwalior. We thank her for her valuable contributions to our panel. Before we begin, I have a small request for our panelists. Our university students have shown great interest in our panel. However, I'm aware that many of them are still developing their also English skills. Therefore, I kindly ask you to speak a little more slowly during the panel. Thanks for your kindness. Now we can move on to our panel. I would like to ask first question to Dr. Malik. Dr. Malik, could you please explain to us what financial inclusion means in a broader context? Why is it so important?
So, thank you very much, Professor Racing, for this opportunity. I would like to, give my heartfelt thanks and greetings to the university for organizing, such a book discussion where we are going to share our insights. As per the title of the book is Economics of Financial Inclusion, and in my discussion during the last 10 decades, I am working on financial inclusion. So the term itself has been explained by different development institutions. World Bank is giving something different. Central banks at regional levels across different countries, they are explaining, all simultaneously different. But what is the unique definition of financial inclusion? It means to ensure that all individuals and businesses have access at affordable costs, access of financial products, financial services, for example, banking, credit, insurance, and digital payment. Now the second part, which is very important, why financial inclusion is important. If we try to look at the report of financial inclusion, the report of Findex, Global Findex of 2021, the figures, they claim that 76% of adults worldwide, they are having now banking access. They are having bank account, they are having a mobile money account, and this 76 percentage has been increased from 51% in 2021. So however, it means over 1.4 billion adults still remain unbanked. As per the latest figure is concerned, 76%. As per the report of World Bank, they are after 3 years announcing this global index report. So financial inclusion helps us. Why it is important? I am focusing on that. It actually helps us to reduce the poverty. It helps individuals to empower them and gives them strength. So the overall economy by enabling investment, it also fosters entrepreneurship and providing a safety net for emergencies. So that is why in brief I have explained it. That is why financial inclusion is important. So thank you.
Thank you very much, Dr. Malik, for your valuable insights. Now I would like to turn to Professor Sikarwar. Professor, could you share with us how the idea of writing this book came about? What gaps in financial inclusion did you and Dr. Malik aims to address through this work?
All right. Thank you so much. First of all, I would like to thank Giresun University, Turkey, and Madam Demirtaş for inviting us for this panel discussion. So I'll talk about how this book came about. So we started planning this book during the COVID time when the governments of different nations, they were taking initiatives from bringing all the sections of the society under the umbrella of financial inclusion. So COVID-19 crisis also reinforced the need for increased digital financial inclusion. And Dr. Malik, as he said, his main area of interest in his domain of research lies in financial inclusion. So the like-minded people, we decided to come up with a book which is now named as The Economics of Financial Inclusion. So we identified, we recognized that there are multifaceted challenges and gaps in achieving financial inclusion globally, world over. So we studied a World Bank report and we found that there are many countries that though they have achieved most progress toward financial inclusion, like India, the nation which we belong to, have more than 1.2 billion residents who are now covered under financial inclusion. Then we studied about other nations like sub-Saharan African nations where though mobile banking account, they've grown up from 12% in 2014 to 33% as we see in 2021. But we found that there are many things which were lagging behind in terms of like gender gap in financial inclusion, financial resilience. So it motivated us to explore this area more, and we just went to check how financial inclusion is going on. So this book, through this book, we addressed these critical areas like the gaps which were there, like related to technology, integration, the urban-rural divide. That means how inclusion between the urban and the rural areas are there in financial inclusion, and what can be the strategies which can bridge the gap. And then there are certain upcoming areas which which are even in the sustainable development goals of United Nations. We tried including them. Then we also wanted to see like which is something which is most talked about, and that is financial literacy, that it has a deep role in in financial inclusion efforts. So we also tried identifying that how this financial literacy is a major factor underpinning the financial inclusion part, and what are the challenges region-wise with various nations they are facing. So we came up with this book. Thank you.
Thank you for sharing that, Professor. And also, I would like to direct the next question to Dr. Malik. Could you elaborate on the benefits that financial inclusion brings to a country? How does it contributing to economic growth and social development?
Yeah, thank you very much. This is one of the fundamental questions. How financial inclusion is helpful in economic growth and development. So from the previous, literatures has been well, explained that financial inclusion helps a country in economic growth and development. So first, if we talk about, Minsky Global Institute report, Minsky, they came with the findings that almost 3.7 trillion annually, especially in emerging markets. 3.7 trillion of GDP has been created by digital financial services. So the transition has been, it has been visible after COVID-19 itself. And in emerging countries, by, creating 3.7 trillion, the GDP, it has helped them to create almost 95 million new jobs. So these are the figures, scientific figures by different literatures, which are explaining how it helps in economic growth. The first one point which I have explained from the Minsky report. The second one, as per the World Bank, they found that financial inclusion, they are claiming it, every government is claiming it, whether it is developed country, developing or emerging, they are claiming that financial inclusion helps us to reduce poverty. So, as per the World Bank reports, they are saying financial inclusion has helped them to reduce the poverty across the regions or across the countries almost 30%. Therefore, it has improving the access quality, credit quality, and has provided the saving facilities to the individuals. So first one, it is promoting economic growth. The second important point, it helps us to elevate poverty. Third important point, which is again connected with sustainable development goals also, gender equality. So it has been it has been argued or discussed, we can say, globally 55% of the unbanked adults are women. So women are, we can say in other terms, they are financially excluded. So financial inclusion helps us to target them and increase uh, women's participation in economic activities. In economics, we are saying economic activities, so that they are able to earn and become independent. So it is the financial inclusion which has potentially helped these women who were excluded, and it has added almost 12 trillion dollar 12 trillion to the global GDP. Again, I am here referring to the Minsky Global Institute report. And fourth important point, that how financial inclusion is benefiting a country is that it gives us social stability. It helps us to the shrink or restrict the gap of inequality. So financial inclusion, it has been helping us to make the income inequality lesser or shrink the income inequality by 1.2% point. So in percentage terms, we can say every 10% increase in financial inclusion in emerging economy. So it is having a great potential. Yeah. So financial inclusion is having a great potential, not only to not only
Oh, sorry.
gelmediniz.
Uh,
Gelince ona da bir bakarız.
Profesör Ayşen Hocam.
Tamam.
Ayşen Hocam. Ayşen Hocam.
Wait, I have
Sorry about that. Okay.
So all participants, we are requesting, kindly mute your mic. So I was, discussing the important point. Financial inclusion is having the potential not only to help in macroeconomic variables like creating GDP, increasing employment. It also helps us to have social stability, like it brings the gender inequality, makes it come down or shrinks it. It helps us to provide empowerment opportunity to women. It helps us to decrease the income inequality. So altogether, financial inclusion is helping the economy to achieve growth first. Then it is having the trickle down effect. It creates so many different initiatives where both individual as well as economy is getting benefited. And same is the case for our developing and emerging countries. Hope I have answered your question.
Thank you for that detailed explanation, Dr. Malik. And now also I would like to ask to Professor Sikarwar again, what kind of long-term impact do you hope this book will have on policymakers and academics? How do you envision it contributing to a broader conversation around financial inclusion?
Right. Thank you so much for your question. So let us start understanding this by a fact that today financial inclusion, it has become a part of global agenda. So from a microcredit movement, which started long back in 1970s, now it has emerged as one of the sustainable development goals. So it is the mainstream goal of international standard setting bodies, national government, and not many actually, all the nations now see it as a tool which is much required for achieving their policy goals, and especially pertaining to financial sector. So our book, that is The Economics of Financial Inclusion, it has all the potential to leave a profound long-term impact on the policymakers and even the academician. So let me start by the policymakers first. So the chapters included, like this specifically, if we refer to the part 6 of our book, it gives a comprehensive insight on the policy implications and intersection of financial inclusion and technology. Even the part 2 of the book, specifically the chapter 9, it has details regarding sustainability and regional development. So if policymakers, they refer to this part, this can help them design inclusive financial systems that addresses the disparities between the urban and rural areas. Even they can cater to the understanding and the needs of the underdeserved population. Similarly, there are chapters in the book which combines both the theoretical insights as well as include the empirical evidences, the case studies, and these chapters, they give you data-driven recommendation. Data-driven recommendations means we talk on the basis of facts and figures. So you refer to the chapter 8, chapter 13, and chapter 17 specifically. So these chapters, they enable policymakers to implement practical solutions for bridging financial inclusion gaps. Then there are chapters like chapter number 1, chapter number 12, and then chapter number 14. So these chapters, they give discussions on gender parity, then also the green finance aspect, the regional disparities aspect, and these chapters, they give guided initiatives which aim to reduce the inequalities and promoting sustainable development goals. So coming to the academics part, we all are academicians and students and faculty who have joined. We all do research. So we all will be highly interested in this book. Reason being, this book covers a range of topics, which range includes financial literacy, the role of technology, the urban-rural divide, which inspire all of us to go ahead with the further studies which is required in this area, and each one of us can contribute in more academic discourse related to financial inclusion. So you see, with an exhaustive coverage and comparative approach, the book serves as a foundational textbook for many courses, especially which are based upon economics, finance, and public policy. And not to be forgotten, another thing, that this book has an interdisciplinary connection. That is, it links the concept of sustainability, financial economics. So a more interdisciplinary research is encouraged through the chapters. And we have also enriched this book with the global case studies, like from both developed and developing nations. So definitely it is going to be a vital resource for inclusive financial system and collaborative research. Right. Thank you.
Thank you very much, Professor. And now I would like to direct a question to Dr. Malik again. Dr. Malik, the book includes examples from both developing countries. Could you share with us the main differences and commonalities you observe between these countries regarding the financial inclusion?
Yeah, this is again, one of the important questions where we are discussing the development gap between, developing countries and developed countries. So if we try to look at the World Bank data regarding the financial access, and they are claiming that developed nations, they are having almost 95% adults who are having access to formal financial services, while in developing countries they are having only 55%. So this is a huge gap. So these figures which I am sharing, they are as per the World Bank Index Report 2021. So by this we can understand that how the gap is lying between developed and developing countries. And the worst case, they are giving the example of sub-Saharan African countries. So this point was access, the financial access, the gap, financial access between developed and developing. So if we try to understand usage, because financial inclusion is having three broad categories by which we are explaining financial inclusion. It is access, usage, and availability. So in access is means simply I will quickly explain. In access, it includes to have services of bank account, insurance, saving, so on. In usage, how the customers are using, what sort of services they are using. And third is the price, affordability. So this all compiles in a broader term what financial inclusion is. So on access term, there is 95% formal bank accounts or financial services access to the citizens in developed countries, while in low or emerging countries it is only 55%. This is a big gap. Now, if we try to understand, usage, developing countries now, they are now focusing to provide, services like investment, digital banking, while developing countries they still are facing the challenge to provide the services like saving bank accounts, and they prioritize microfinance. So again, there is a gap. Developed countries they are thinking about investment, while in developing countries they are with basic amenities, basic services. So the second part of the question was what is the common in developed and developing countries. So the common problem is that both are facing the gender inequality. Both face the challenges in reducing the gender gap. So it has been found as per the Findex 2021 report that women are having almost 7% less chances to have a bank account. It is as per the Findex. So we can understand that gender gap is challenge both for developed and developing countries. So mobile technology is critical in both regions. So that critical driver. So for example, mobile services, they are 1.30 billion registered accounts globally. So, but there are challenges that technological hacking, spams, and financial inclusion is provided. We are talking financial inclusion. It needs to more vulnerable populations, destitute populations, adults and women. The cases are different at developed and developing stages, but the common problem is hacking, online scam, and so on. So these are the common factors which are the challenges in both developed and developing countries. Thank you.
Thank you for that comprehensive explanation. Now I would like to turn again to Professor Sikarwar. In your experience and based on the research covered in the book, which groups are most affected by financial exclusion? Additionally, what do you believe are the potential social consequences of this exclusion?
Right. So first I'll start with statistics. And these statistics, they come from World Bank. And it says like about 1.7 billion people worldwide are not financially included. So it's a big number. And the statistics, they are like quite alarming. So financial inclusion, as we are discussing, it affects mostly to the vulnerable groups, like as said by Dr. Malik in his previous discussion, like there are women, there are youth, there are poor who are most vulnerable first thing, and who do not have much access to the finances which are available in general to all the other sections of the society. So when we say poor, they do not have access to financial services, they are unable to plan their financial lives, or they are unable to respond to any of the financial emergencies they face in life, or we can say to the economic shocks if they come to them all of a sudden. So we should understand that financial inclusion is also not to these particular groups, but it is also most commoner thing in the developing nations as compared to the developed nations. So putting it differently, we may say that women, particularly in the rural areas, where the societal and economic constraints limit their access to financial resources, they are most affected. Then there are disabled individuals because of their systemic barrier, or because of the infrastructural barriers, they are not able to access the financial services and are often excluded. Then during COVID, we have seen that, and still it is very much there that the migrant workers, they face challenges in accessing the formal financial services because of their mobility, and these financial services, they require the documentation. So they are just excluded from the service. Then there are poor and rural population both. So when I say poor, I mean poor living in rural areas as well as the urban areas. So poor and rural population, again, they lack the proximity to education and resources as well. So they are not able to access the banking and financial services. And there are certainly other marginalized groups who often live below the poverty line, or who often live in extreme poverty, and they just are unable to get access to the formal financial system. In many nations, it is seen that there are certain geographically isolated populations, like living in the remote areas. So they definitely have limited access to the financial infrastructures, and the major thing, the internet-based solution, because the inclusion these days requires major access to the fintech, which we say. And then individuals who do not have a bank account, fortunately, in India now we have majority of the population covered under has bank account, but still world over there are certain nations which still have individuals who do not have bank accounts, or they rely on the alternative financial services or instead of what the traditional or formal system of banking is. So they are the ones who are mostly excluded from the financial services. Now, coming to the second part of the question, that what are the social consequences of financial exclusion? So, financial exclusion is or should be considered as a mandatory requirement. It should be treated as blood life of the system rather than anything else. So, financial exclusion, it has a disproportionate impact on the various sections of the society, which we talked about, the marginalized demographics, which do not have any access to the crucial financial tools. So, socially, if we say that financial exclusion, it leads to the widening of disparities between who are included and who are excluded. So ultimately giving rise to the social inequalities. Then exclusion, it isolates people or groups from participating in the mainstream economics or social system. People who do not have any access to financial system, they often keep themselves away and are away from the natural participation process in the economic and social system. Then if we specifically talk about the developing economies, so a nation cannot fully take use of its potential in case there are sections of the society who are excluded. So the potential economic productivity and development of a nation doesn't come up outrightly if there are sections who are excluded. And in case it becomes a continuous thing, like continuously the major portion of the population is away from the access of credit, savings, insurance. So this such nations, in case that is in continuation, they becomes more vulnerable to the financial shocks, and they get entangled in the perpetual cycle of poverty. So ultimately, if any nation it wants to achieve the sustainable development goals, the agenda which is now on the topmost list, it has to take care of the financial exclusion so that everyone is included, and the nation doesn't go in a vicious cycle of poverty and financial shock. So I hope I'm able to justify my answer.
Thank you. Thank you, Professor, for your valuable insights. And now I would like to ask to Dr. Malik. Dr. Malik, technology is driving significant transformation in financial inclusion. While addressing this topic in the book, which technological advancements excited you the most? Could you also share how these advancements are making a tangible impact?
Yeah, thank you very much. Actually, this is one of the important questions to be, debated. Nowadays, research is going on, how technology is shaping the future world. So, therefore, technology has played a significant role during COVID-19, and it has shown the transition how traditional marketing system has changed to online marketing system. And similar is the case with banking services. If we try to understand, I'm just highlighting quickly few examples that how technology has taken the world ahead and how it will be leading in all economic activities. So like Uber, so we are having transport without having their own car. Similarly, in banking, we are having financial services without a bank. So therefore, coming to just some figures that mobile bank, mobile money. So the best technology across the world, which is appreciated from Kenya. So that is with mobile money, and its name is M-Pesa, especially in Kenya, which has made a revolution in financial inclusion there, and it has helped almost to contribute $50 million annually, both in rural and urban areas. Mobile money is the first important, which is being accepted across the globe, and the best example of it is Kenya, and it is by the name of M-Pesa. The second important point which IMF and World Bank is discussing about the blockchain. So blockchain has again made a revolution. It has decentralized the financial services, and it offers low cost transactions for populations who are in weaker countries. You know, I mean populations who are having weak economic uh, we can say like this, who are vulnerable, populations who are vulnerable, or we can say poor. The blockchain has helped them to get low transactions digital services. So blockchain is again appreciated. It has revolutionized. So nowadays AI and machine learning. AI and machine learning, they are helping the businesses where they promote or make available financial services. They have given us credit sourcing models, especially banking. Banks are the institutions who believe in businesses and profits. So AI and machine learning technology has helped banks to have some driven based models where they have till now, as per the World Economic Forum is concerned, because of AI and machine learning, almost across the countries, it has helped them to generate $15 billion loans. It is the figure of World Economic Forum. So the example, one of the greatest example, and India is appreciated, and India is going to have the online, digital transactions with UAE through mobile, app, digital technology, mobile technology. For example, if I have to go Dubai, so I do not need to, make currency exchange. I can use the, app like Google Pay, UPI, and phone pay, and I can utilize these digital technologies at my own hand. So these UPI transactions has been increased because of digital infrastructure developed in India that has helped almost to create 74 billion transactions. That I am citing the data of 2020, which has helped to generate the income of 1.4 trillion. So I appreciate the most. The question was that who excited you the most, the technology. First is, if we take the example of Kenya, where they are having M-Pesa that has revolutionized the financial inclusion. The second one, I will be appreciating the UPI system in India. It has made life very easy. You can go without cash if you are having that app. You can do everything with that. You know, every transaction you can make. So yes. So let me repeat quickly what I have answered. First one is mobile money. The second one is the revolution of blockchain that is again going on. The research is going on that. Nowadays, AI and machine learning, they help us both individuals and businesses, and the crucial example of Indian digital platforms. So they may be initiating this in the BRICS, the association of the BRICS. There they are making to have some alternative currency against the dollar. I do not know how successful they are, but these are the some of the technologies which are contributing highly across because of the financial inclusion. Under the umbrella of the financial inclusion, they are helping the economic activity to work smoothly and take the pace of technology within the technology. So thank you.
Thank you to Doctor. Now I would like to direct the next question to Professor Sikarwar. Professor, how do fintech and digital banking enhance financial inclusion, particularly in developing regions? In your opinion, what do you see as the biggest barrier to the expansion of digital finance, and how can this barrier be addressed?
All right. So how fintech and digital banking enhances financial inclusion? So we live in a world where access to financial services as well as high-speed broadband internet is not universal or affordable, excluding India. I would like to focus here because we are the one where we have the high-speed broadband internet available, and it is pocket-friendly and it is accessible to all. So fintech has all the required capabilities which can democratize the access to finance, and now the world can move closer to achieve its goal of financial inclusion. We can see the power of fintech in digitalization in latest statistics, and it tells that over the last decade, 1.2 billion previously unbanked adults, those who were not using any kind of banking services and those who were not having any kind of banking account. So 1.2 billion previously unbanked individuals, they gained access to financial services. And the unbanked population, it fell by 35%. So what has happened is in the previous question, Dr. Malik discussed that the M-banking and the UPI system. So these are the contributors which have increased the mobile money banking account. So the thing is that while 1.7 billion adults remain unbanked, now the fintech is making help or helping people or helping institutions or financial service providers to make the financial services more accessible to the people. So how fintech is going to, or how fintech is helping out the population, that it can and has reduced geographical barriers and has allowed the underserved population, particularly in the remote areas or rural areas, to access financial services through their simple mobile phones and with an internet connection. Similarly, if you see digital platforms, they have lowered down the transaction cost, operational cost, even for the financial institutions. Now, what they are able to do, they are able to offer more and more financial services to the lower income customers. So it's not about if you have low income, still you have accessibility to the financial system. Then what institutions are doing, they are offering customized solutions to the individuals using the fintech. Like what kind of solutions? Micro loans, mobile wallets, real-time payment systems. The institutions are offering, and now this is really helping them to meet the exclusive or the specific needs of the individuals, and including those who were financially excluded. Another point to this is that these digital platforms, the mobile banking platforms or internet platforms, they often have incorporated educational tools with them. So not only they are just helping in making the ease of financial transactions, but they also help individuals to increase their understanding of the financial products, making them take better decisions about what is right, not exactly right, but what is better or more appropriate decision for them. And with no doubt, the use of AI blockchain, it has improved the efficiency, the security, the transparency concern, and now the individual feels more trust. And definitely, it is going to be the thing which has potential of scalability in financial services. And the second part which you asked was related to biggest barrier to digital finance. So so we live in a world which we have categorized as developed, underdeveloping, or not developed into nature. So the biggest barrier to the digital finance is the lack of digital literacy. And the another one is access to technologies. So many nations, they're working on it, but still the operational barrier which the institutions they face is the accelerated adoption of the technology, the faster adoption of the technology, and having the modernized IT system which is available in their nation. So financial institutions of all sizes, bigger, smaller, they just, what they want to do is they just want to incorporate the cutting edge technology which is available to them. But the thing is, they want to move online, they want to offer digital services, they want to have a massive transformation, everything in a go. But at the core, they should understand that the banking and digital transformation is not a one-day affair, and it takes time. So if the institutions, they want to launch many digital initiatives at the same time, so it will have a poor probability of getting a success, because much resources, much coordination is required. So the suggestion here would be to reduce this barrier. What one can do is like integrate, institutions should integrate digitalization, but it should be step-by-step process, and then they should invest more in customer experience platforms, the application, the app-based development, and the infrastructure. So this is what we understand is required to remove the barrier.
Thank you, Professor, for your thoughtful response. Now I would like to turn to Dr. Malik. While digitalization increases access to financial services, it can also inadvertently create new inequalities, particularly for those lacking digital literacy or access to technology. What policy recommendations do you propose to maintain this balance and ensure that digital finance remains inclusive for all segments of society?
Yeah, thank you very much. This is, again, one of the important topics which is there with the developed institutions, particularly World Bank, to elevate the poverty and promote the financial inclusion and empowerment. So, first, we must, promote digital literacy. So again, let us, citing the World Bank report, they are saying that if we promote digital literacy, especially among rural areas, there are chances that we will be having almost 40% annual increase in GDP. So if we promote digital financial literacy, this can help us to achieve GDP by 4% annually. This is as per the World Bank report. So we should strengthen the policies and programs to promote digital financial literacy. The second one is we have to create infrastructure development, so which is lacking. So that is why countries are subcategorized: developed, developing, and emerging countries. So infrastructure is again the big gap. We need to provide internet connectivity between the regions, whether they are urban and rural. So that will also approximately 2.9 billion people worldwide still they are not connected to the world internet. Then regulation is one of the important aspects to develop infrastructure for promoting financial inclusion. So regulations is very because nowadays after COVID-19 especially digital platforms are coming and they are having different business motives. So there are not proper rules and regulations. Therefore, every country or every region, or if for uniformity, World Bank should come with some rules and regulations to promote these financial services. So then there is one more important point. I do not know whether it is in developed countries. There is the concept of subsidies. So subsidies they are helping consumers especially to achieve their financial services. And in India we have this targeted subsidies, and I will highlight the slogan in Hindi. It is in Hindi. So Prime Minister Modi he came in 2014 with the slogan that Sabka Saath Sabka Vikas. So it means that for all and development for all. So under that umbrella slogan, India has announced 4 banking programs. The first, universal program which has achieved the milestone of financial services was Pradhan Mantri Jan Dhan Yojana. It is also Hindi name, but the objective of the scheme was to provide free of cost bank account, zero balance bank account, have been opened for the vulnerable population. So to target those ultra poor people, to give them this subsidy, open bank account free of cost. So that has helped India to open almost as per the figures of Central Bank, RBI, Reserve Bank of India, 98% people are having that bank account. So with that, the people who were financially excluded, almost to 500 million people, were out of the main banking financial system. They are now the part of financial system in India. Then again, I am debating and discussing this point, quite frequently that just like we are having revolution in fast-moving products. For example, we are in India. I do not know outside India. In India, but almost in South Asian countries, we are having shampoo. The shampoo pouch, we can say, of 1 rupee, Indian 1 rupee. And I am of the view such type of banking financial services should be also there, because providing fast moving goods, for example shampoo of 1 rupee, the ultra poor can buy that. Similarly, these ultra poor people, their demands of financial products is quite different. While banks you know they are themselves providing their services as business institutions. Their motto is always to provide any financial services. They are dealing with profits. So the profit motive and to dealing with the vulnerable populations who recently became the part of financial inclusion. So there is the gap. What sort of financial products they need. So let us understand it with this example. For example, ultra poor who have opened the bank account with zero balance, by the program under the prime minister or government. Government has given them subsidy to open that bank account. Now they are not able to afford the housing loan at 9% of interest. So therefore, financial product should be in line them. And one more important point in our book is there is one chapter by our name. There is Professor Tarika, me, and there is Nidhi. So we came with the concept that these financial programs by any government at world level or at country level, whether at regional level, developed, developing or developing countries, there are forecasting variables which are missing. So we should also, while announcing a new program with the objective that we are having target, for example, of GDP 8% next year. To make that 8%, there are forecasting variables which will restrict us to achieve that 8%. So the policy or the program should have flexibility or should have, you know, pre-planned preparation to achieve that objective to deal with the forecasting variables, or we can say in economics exogenous variables who will be making restriction to achieve that growth. Therefore, in every financial program, if they are having targets, for example, sustainable development goals by 2030, but there are climate challenges, there are rains, floods, earthquakes, wars. So these programs, they are lacking these forecasting variables. So in that paper, we have designed a model that forecasting variables should be there. They should be dealt pre-planning by pre-planning, so that we can achieve, the balance between digital and inequality. Thank you very much.
Thank you, Doctor, for your valuable insights. Now I would like to turn to Professor Sikarwar for last question. How does increasing women's access to financial services impact overall financial inclusion levels? Could you also share with us any examples or case studies from the book that highlights the positive effects of women's financial empowerment?
All right. So I will start answering this question with a happy note that a recent World Bank report that is of 2024, it highlights that the nations which have higher or highest rate of financial inclusion, they experience higher GDP growth rates. They also experience reduced income inequality, and they are more or they have increased resilience against the economic shocks. So this statement, this figure itself says that women's access to financial services is definitely going to have a huge impact on the financial inclusion and the development of the nations. So even the research and the statistics, they have proved that if we increase or if women's access to financial services increase, there is a significant enhancement in the level of overall economic development. And you see, there are many financial services service providers. They fail to effectively engage women, particularly why they fail, particularly related to the low income backgrounds and the uneducated one, the illiterate one, because they do not target or they do not make their products which is accessible to them, which is understandable by them, and hence what they do is they miss out that viable market segment. So though the nations have their own infrastructural barriers like related to internet connectivity, related to inclusive ID systems, there are many nations which still have these limitations. So ultimately it leads to the lesser inclusion, or what we can say is the exclusion of women from the major participation in the economic process. And so if nation focuses on the inclusion of women in the financial system, increasing women's access to the financial services, definitely it is going to have a global impact, and and it will empower women to participate more and more actively in the economy and help them to save, invest, start business, manage their household finances, and ultimately it is definitely going to contribute to the economic growth, to the poverty reduction, and especially in the especially I'm talking about the developing nations. So it is very much crucial, like for achieving the broader goals of financial inclusion, all the nations have to address to this or cater to the needs of this section of the population. And you were talking about the case study from our book. First, I'll talk in a broader term and then I'll come to a focused one. So there are chapter number 3, 14 and 15 in the books. First, these chapters, they talk about how access to financial products like savings, loans, insurance, how they enable women to contribute actively to the household income and local economies, and thus leading to the inclusive growth. Similarly, I would try to focus upon the chapter number 12, 13, 14, and 17. These chapters, they talk about the programs like Pradhan Mantri Jan Dhan Yojana, the Hindi name Dr. Malik already spoke about. It is in India, and it demonstrates how positive impacts the inclusion of women in the society has and how economic empowerment it has given to the women. So, coming to the specific chapters which you were talking about, so I would like to focus here upon the chapter which is there. Just one moment. I'll just read out the name for your ease so that everyone is able to understand. Chapter number 13, and it talks about predicting the Indian housewife's intention to adopt mobile banking services. So this chapter particularly talks how inclusion inclusion of Indian housewife. Indian housewife means the female who is not into job, who is not working anywhere, who is not self-employed, and how the adoption of mobile banking services had led to the more inclusion of Indian women in the economic development part. And similarly, there is chapter number 12 focusing upon women empowerment, gender inequality, and financial inclusion. So it gives a detailed case study from Malaysia. So a quantitative approach has been adopted here, and you see that we were just talking about India. You see even in Malaysia how inclusion has affected women in particular. Thank you.
Thank you, Professor. Now I would like to open the floor to our participants. If you have any questions for our panelists, please feel free to write them in the chat box or unmute your also microphone. But kindly indicate which panelist you would like to address your question to. Any questions?
Good evening, Dr. Firdous, sir, and Dr. Tarika Singh Sikarwar. I'm audible?
Yes, you are audible. Go ahead, please.
Perfectly audible, please.
Okay. First of all, many congratulations to Dr. Firdous and Dr. Tarika on the publication of this significant and timely book, The Economics of Financial Inclusion. It is truly a valuable contribution to this important area of study.
Thank
Sir,
you.
I want to ask two questions, if you please allow me. Ma'am, please, if our time permits, please.
Please go ahead.
Okay. Sir, Firdaus sir, as India's vision Viksit Bharat at the rate 2047 initiatives aims to transform the nation into self-reliant, inclusive, and developed economy, targeting a 5 trillion economy in 2047. In this context, how pivotal is financial inclusion in ensuring that economic growth is both equitable and sustainable at a time? Also, could you please share any key strategy or example from your book that align with this vision, especially in terms of bridging the gap between financial access and actual economic empowerment, sir?
Yeah. Thank you very much. As per the preparation for Viksit Bharat 2047 is
Yes.
concerned, it needs big plan.
Yeah.
So at the moment, India is at the at the top position as per the financial inclusion is concerned. We have achieved the milestone of opening bank account of 98%, but the excess financial excess or mainstream banking it has touched more than 65%, and there is remarkable you know goods and service taxes after the mainstreaming banking. So therefore
Mhm.
with that I think India is at the right place to achieve the Viksit Bharat slogan. But as I have highlighted in my recommendation, that there need be the programs of gender gap should be balanced. We need to generate more employment opportunities, as India is a country where we are having young populations. Unemployment is big challenge. Financial inclusion cannot be achieved with such unemployment figures. Then again, we are India is considered as the ecosystem for startups or entrepreneurship.
Right.
To fund these entrepreneurs and create the infrastructure where we are having good figures of GDP. GDP is
Right.
contributor of economic growth and development, as we were discussing before. Tarika has put some light on that. To achieve the Viksit Bharat, it is almost a big plan, long-term plan, but we cannot achieve it until and unless all the masses of the country who has recently joined financial inclusion became fully able to utilize financial services. That is why I was focusing on financial access, financial utility, and affordability. So we are having populations who are living below poverty line.
Right.
So the program should be in such a way so that they can be empowered and they can be economically independent. Once they are economically independent, they will contribute to economic growth and development, and definitely they will be the contributors of GDP. So I hope I have replied to your question as per the expectation.
Thank you. Thank you. Thank you so much, sir.
Thank you for your question. And any other question?
Hello, can I ask you a question?
Yeah, sure.
Okay, hello, this is Haji from Giresun Üniversitesi. First of all, I want to thank Dr. Malik and Dr. Sikarwar for their book and for their time to share their valuable thoughts with us. And I also want to thank Dr. Demirtaş for making this happen. My question is about violence against women. So you said financial inclusion is empowering women financially, and like it's reducing the gender gap. So do you think is there any effect on what would be the effect of financial inclusion on violence against women especially in developing countries, in underdeveloped regions? Do you have any insights about this?
So should I?
Anyways,
I will. Okay.
please. I'll just start the discussion. I'll just give a starting note to it. Professor, thank you so much for your question. And it is a very different question, which we agree that we didn't make a part of this discussion. So coming to your question, so we all are talking about like how crucial it is to empower women and to make them part of the financial system and enhance their economic independence, and make them more part of the society. So what I understand, definitely it is going to reduce their vulnerability towards the violence. So what, in my opinion, what I understand is it has the inclusion has both direct and indirect effects on the violence against women. So positively, if we talk about, the inclusion will give economic empowerment to the women. So when women, they earn, they save, they invest, and they gain financial independence, it is definitely going to reduce reduce their reliance on the uh, abusive partners, family members. What I understand is it is going to give them more autonomy, and more they will be included in the decision making roles in the family. And what I understand is when they get the financial independence, they are going, they're not going to be not going to be part of any of the abusive relationship in case they have. So it is definitely going to have an impact upon the violence against women part. And I definitely, in case the nations, in case they are having initiatives taken for reducing such gap of financial exclusion, so it will definitely going to reduce the violence against women. Dr. Firdous, you may continue, please.
Yes, thank you very much. Actually, this is one of the important questions, that violence against women and how financial inclusion is helping us to reduce it, and what is the role of financial inclusion, whether it helps or not. So fortunately, my one of the paper which is coming maybe in Feb. So in that I tried to explore the financial literacy of women. It is a case study of Mumbai, India. So in that I am trying to explain the power of financial inclusion, which empowers socio-economic activities of an individual, and what is the role and a society. So the first title which we were discussing with my co-author, that patriarchal issues and financial inclusion of the woman. So it has been found from the literature. I am citing some of the literature. It has been found those women who are dependent, whether on their husbands and family, they are having major challenges of violence. They are probably more victims of, while those women who are independent, who are salaried, who are generating income, who are in jobs, they are less violated. So as at the initial level, as you have mentioned in this question, that how financial inclusion is promoting one side economic growth and development, and what are the consequences of violence. So growth and development, these are the broader aspects of development considered if we try to understand the macroeconomics. So an individual who is financially excluded, let us take the example of a woman who is financially excluded. She is more vulnerable of violations. Women violations is more. When she is getting some economic power, where she is having money, she can use that power. While she is getting the money, she is able to express, use the institution. She is able to raise the voice. Because of the money, she is having now connectivity. So it is the common phenomena in the world. If, for example, you do not have money, you will be having less friends. If you are having handsome money, people will they wish you. So similarly, as per the societies are concerned, people who are well off, man like Elon Musk, across the world, people are appreciating Elon Musk, great, personality, having such, high tech position, and he is leading the world. But he is not knowing those people. Because of this economic power, people can be able to, empower themselves. Similarly, as per the literature, but in our paper, what we have found, those women who are salaried, they are less exploited. And there was the question of debate that whether women are able to take the financial decisions themselves or not. For example, if they have to buy a house, whether man or his husband or her father or her family members, they are taking the sole decision or they are including. So in our city, what we find, those women who are earning good salary, they they have been participated in these decisions, while those women who are not earning, they are not sharing or discussing such important decisions with them, whether it is to buy house, to send their their children to the school, what sort of school they are going to send them, or they have to buy any asset or property or anything which is related to money or income. So only those women have been taken into consideration who are economically sound or who are generating the assets. So these are the cases. So maybe there are differences across the world, but literature and World Bank, we have cited World Bank reports, it has improved their lives. And they have cited the examples of sub-Saharan. Sub-Saharan is the continent where women are more vulnerable and poverty is persisting very badly. So there it has been, seen that financial inclusion has helped them to achieve empowerment, economic empowerment. So economic empowerment is definitely leading to have less violence. So hope I have answered your question.
Thank you.
Thank you very much for your question also. And there are two questions on the chat board. One of them is from Noratam, and the question is there any promising financial inclusion and fintech database available in India which supports today's discussion?
No, particularly in India, there is no database on fintech, but at World Bank and IMF there is data. But in India, there is ample data which is supporting financial inclusion. But fintech and findex, that data is being communicated by World Bank and IMF. So I have answered this question.
Thank you. And another question is from Asra. And the question is for Professor Tarika. Despite in today's rapidly digitalizing world, women still face several barriers that impede their access to financial services. Most importantly, the societal norms and cultural constraints often discourage women from utilizing financial products. So how important is it to break these constraints and these discriminatory laws against women so that they are able to engage with the modern financial tools?
Right.
Thank
you.
you.
So the question is raised by Madam Asra. I would like to start with a statement. Like we all understand, financial inclusion is for all. It has no gender bias. One thing. So what does it mean? It means financial inclusion despite of wherever you are, the society, the culture, the laws, everywhere, wherever you belong to, financial inclusion is no longer a luxury product and it has become a hygiene factor. All right. So it's a necessity a woman has these days. It's not about the discriminatory law. I understand every nation should give, and it is a necessity that every woman should have equal opportunity to access the opportunities which are available in terms of having the access to financial services, whether they are digital, non-digital. Every woman now, when I say women, I mean, because you have a specific question related to women, it means every individual has this right to improve the livelihood and to contribute meaningfully to the economic growth of their nation. So if a woman is economically independent, is having an access to the financial institution, has saving account, has gained economic independence, it would definitely help them to invest better for their education, for their family's education, for the health of themselves, for their family members. And it is definitely going to help them to allocate resources towards the betterment of themselves, even for their family members. So it's not about being financial inclusion being a luxury. It is about a hygiene factor. It's about breaking societal and legal matter. It's not just a matter of equity. It has the economic imperative here. Thank you.
So can I add to this question?
Sure.
So actually, it is there. This question is actually part of. There are three questions. One is societal barrier, discrimination of the law, and how we will have financial inclusion. So, as per the Indian case study, if we try to understand the financial services available for Indian women, the empowerment opportunity to for women is that they are getting subsidized rates. For example, if they have to buy property by their own name, the rates are quite low in comparison to male. If they have to apply for any property, they are getting subsidies, and government fee and taxation is quite less for the women. In the literature of financial inclusion, we are having two concepts of financial exclusion. One is voluntary financial exclusion, one is involuntary. So, but by the definition of financial inclusion, they are saying we are providing financial access to all the masses across the country or across the globe, irrespective of color, caste, gender, creed. So therefore, the system is not having any financial differences to provide financial inclusion. So definition is, so before 2005 in India, there were cases. Populations were excluded on the basis of their, designation, on the basis of their social status. But after 2005, it has been made an act under the government of India. And same is the case with the World Bank. In 2006, they came with the Financial Inclusion Act to provide all these financial services irrespective of color, caste, creed, and sex. So system is not providing. But then literature has been developed, case studies has been developed. They developed the literature voluntary financial exclusion and involuntary financial exclusion. Voluntary, there are some religious backgrounds or cultural norms. They are not leading women to participate in financial products or register themselves to the mainstream banking. But the involuntary financial inclusion, where people are interested to take part into the financial inclusion, but they are unable because of one reason or other reason. The one reason or other reason can be they are having low income. If they are having low income, they are unable to open the bank account. If their economic activity is vulnerable, so therefore these digitalization or banking arrangements, financial services are of no use. So at world level, this involuntary financial inclusion has been targeted by various programs to provide free of cost bank account, example of India, to generate or revolutionize M-Pesa in Kenya. So these are the supportive programs to make these women to come into the mainstream banking. But the question of discriminatory, so if people are not interested, voluntary financial inclusion, so government cannot compel them to open the bank account. So therefore, these are the two approaches. But the approach where participate in financial inclusion, it definitely helps us. As we were discussing in the last question, it helps us economic activity. Economic activity leads to economic growth and development, not for the individual, but for whole the economy, for whole the country. So I hope I have added some value to this question.
Thank you. Thank you all for your insightful questions and active participation. I would also like to extend my deepest gratitude to our esteemed panelists, Dr. Firdous Ahmed Malik and Professor Tarika Singh Sikarwar, for sharing their valuable knowledge and expertise with us today. Your contributions have provided us with a deeper understanding of financial inclusion and its critical role in economic development. Before we officially conclude the panel, I would like to give our panelists the opportunity to share any final thoughts or closing remarks. Dr. Malik, let me start with you.
Yes, so before we will have final conclusion, so I would like to take group photo. So all those people who are able to open their camera, kindly on your camera we can take a group photo to have a sweet memory about this event. So yes, the final remark is that without financial inclusion, life is impossible to survive as per the future transition of life is expected to. We will be dealing with the technology, so technology is there to participate in well. So therefore, all people they should mitigate their economic activities to float smoothly with the digital revolution. So that is only possible. They have to be economically sound. They have to update their skills, and they have to have a mission of their life and try to utilize all financial services as soon as possible and try to make themselves financially literate. So frequently I am discussing the point that is financially literate is one term and digital illiterate is something different. So I hope in next decade less people will be digital illiterate. Thank you very much for the opportunity from Professor Ishal for this thought-provoking, I can say, thought-provoking discussion we had and creating such an environment where we have shared the thoughts about our work. So once again, I am very thankful for this opportunity. Thank you.
And thank you. And now, Professor Sikarwar, I'd like to turn to you again.
Right. On honest opinion, this was the most engaging discussion we had on this book, and I hope my co-editor, Dr. Firdous, would agree to it. And see, technology is something which is ever changing, and it is taking you to the upper edges. So if anyone who is not able to access the technology which is available today is definitely not going to understand what is going to be available tomorrow. So more inclusion to services is the key factor. And another thing, both of us, we plan to launch a second edition of this book, that is the Economics of Financial Inclusion, because it is an ever-changing area of research, and there are so many updates which are definitely going to come in the area of financial inclusion. So we think positively about it. And thank you very much for inviting us for this discussion. Thank you. I appreciate it.
Thank you. With that, we conclude today's panel. Thank you once again for being with us, and we look forward to seeing you at the future events. Have a great day.
Thank you very much. I'll be sharing the photographs with the concerned authority, then you can share it. And the video, let us